Okay, everybody, FX Streets Chief Market Strategist Valeria Bednarik. Here we go. Hi, Val.
Hi there, how are you?
Okay, wow. Can you spell short squeeze? What a day yesterday, huh?
Yeah, don't tell me. It was pretty fun.
Yeah, I heard you guys had a great crowd and got a lot of great feedback on the coverage. Curious to see after, as I tweeted, Val, after, in volatile times, you're a calming voice. I was very interested in getting your perspective on what happened yesterday. Of course, they cleaned out every buy stop possible in the euro with that spike. And we have retraces going after that move. Where are you at on the dollar?
Well, I was following Liv, everything that Shalene said yesterday. And the fact is that she didn't say much that changed in the background of what we are living in the world these days, right? Because, yeah, they removed the word patient, but now they are they need to be, how do they say, comfortable. They use a new word. I don't remember. Comfortably reliable on inflation or something like that. Meaning they changed the wording, but at the bottom is the same. And she gave a lot of mixing and confusing signals as usual. We are not going to raise rates in April, but don't dismiss it. Maybe in June we discuss it, but we can rise, but we cannot. Anyway, I believe that the market was due to a large correction against the greenback, and we had that yesterday.
Well, isn't it different though, Val, that she did mention the dollar? So usually it's the Treasury's purview is commenting on the dollar. I can't remember Fed chairman talking about the strong dollar being a potential problem. So.
She said something that a strong dollar will keep inflation subdued, right?
Yeah. So commentary on the dollar, I think, is a little different. We haven't heard that for a while. And she got every reaction she wanted yesterday from sending all those mixed signals.
Yeah, but as I was anticipating, the reaction was limited and as what we are seeing it today, because I don't know how many times in Europe we have seen the case of ECB members or Trichet before Draghi saying that a strong euro could be a problem, and anyway the euro rose and rose and rose back in the days, right?
Yeah.
And the same goes for the dollar or any other currency. Market does not pay much attention to that expressions, at least beyond the short term. You know what I mean?
Yeah.
The short term reaction was huge to the upside, and I believe that the last 200 pip spike, that it was pretty much erased in a couple of minutes, was due to the lack of liquidity because the US closed and we had only New Zealand markets open at the time. But the market didn't take long to sell back the euro or the pound or the Aussie and buy back the greenback, right? Because my personal view is that the background scenario is still the same. If it doesn't matter if the Fed is going to rise rates in June or in September, the fact is that the only one that's going to rise rates. So that keeps attracting investors.
So what do you do after massive volatility? Do you wait a few days for the market to settle in? It's kind of like when you have, kind of like the day when the Swiss unpegged, and then yesterday, it's almost like the markets are in a little bit of a state of shock after yesterday, and you just have to wait for regular patterns to reemerge.
Yeah, in fact, in euro, I'm in a waiting mode because I'm expecting it to break below 630, right? I expect them to have a rally towards the 550, 560, 70 price zone in between there. And the pound is already telling me that it's breaking lower. I was expecting for a break below 48, and it did. We're trading 30, 40 pips below the level. So if we hold or we close the 4-hour candle below this 48 level, I would expect it to continue sliding towards 47.20 or so. But yeah, I have been in a waiting mode until a few ago because the market is extremely volatile today. I guess tomorrow we may see the market settling a bit better.
Okay.
It will be not as much as S&B, but close to.
Okay. Any view on commodity currencies? They've been a bit wild as well. Gold had a huge move. In fact, yesterday you could have bought anything and made money. You bought currencies against the dollar. You could have bought oil. Oil reversed and then gave it back today. Gold reversed, hasn't given as much back today. So any view on what's happening in Aussie?
I have just closed my Canadian dollar chart.
Oh, okay.
I was looking for it. I was looking to this trend line that the pair broke long ago. To take a look at smaller time frames in the 1 hour chart, you see that it has make a spike below it, but didn't the trend line actually have, and it actually recovered from the line.
Yeah.
So
interesting look.
Yeah, for the most it's a bullish stance in the year for me, right? It reached fresh multi-year highs before the slide.
Yeah.
So I'm still seeing some strength in commodity currencies, particularly. I'm sorry, the strength in the greenback against commodity currencies, particularly because I believe that both the oil and the gold are still under pressure, still have little room to the upside. The oil has almost erased all its gains. I'm a bit surprised that gold is holding at these levels, but still, I believe that we have room for further clients. Australian dollar, it's more or less the same the case than with Europe, right? The yields will reach rates this year. Europe started quantitative easing. In Australia, we are talking about a rate cut, maybe next month, maybe the other, right? And they cut rates in February already, and they're planning the second one for the upcoming months. So the market is, I don't know, it's like a donkey following a carrot, right? And that carrot is rates.
Okay.
And we can go with that. We may agree or not agree with what the market is doing and how it's doing it, but it is what it is.
And the U.S. dollar yen, I believe we both had a negative bias. I didn't think we'd get to 118 and a half that quickly, though. We're getting a bit of a recovery today in the yen, but I don't think it's quite as strong as USD CAD. It's been acting weaker as a dollar hedge than USD CAD has. So, view on yen, is this a rally to sell after yesterday's spike and recovery?
I'm not seeing it clear, to be honest with you, but what I'm seeing is that the pair, what I saw at least, is that the pair stalled a few pips above the 100 daily moving average. So actually, the downside seems pretty well limited at the time being. But I'm not comfortable with all this congestion in the 120, 140, 60 region we had these days. So actually, at this point, I'm a bit neutral in the pair, sorry. I need to see it above this area. I don't know, to go up to the upside or below 19 to confirm me a bearish continuation. 19 is the 100 simple moving average. Right
so,
here,
we're in no man's land everywhere.
No, mostly in the Japanese yen. In the rest, I know I know where I want to go.
Okay. Bearish pound, bearish euro, but you need 106.50 to commit to the short side in euro.
Yeah, a bit less, a bit 630, right?
Okay.
Below today's lows.
Okay.
It's the 20 simple moving average also in the 4-hour chart, so I would like to see a pair breaking through this level. I don't know, we had already dropped, if we take yesterday highs until now, the pair has been moving, what 400 pips, so I'm not expecting much right now, right? It's not that we're going to break and move another 50 pips, I don't see that. But yet again, it could happen.
Okay, so again, most of the setups that you're looking for, it's going to take a few days for to have more conviction about which you have a bias. It's a bullish dollar bias, and you probably need a few more days for things to set up for you.
Sort of, yes.
Yeah. Okay.
They need to. The market need to digest this.
Yeah.
financial moves we have yesterday.
Yeah, I hope the market takes some Pepto-Bismol so that things settle down and digest a wild day. And yeah, we're getting more and more of these wild days that, months worth of action happen in 24 hours. So remember last year everyone was complaining about low volatility?
Yeah, remember that? I don't.
Yeah, so
yeah, you're right.
Now so hopefully they're not going to complain about that it's too volatile.
No, I hope no one is complaining. I mean, it's what we need.
Yeah.
Yeah, we have one. That's what I always said. It's central banks' decisions, payrolls are not the day to trade, are not the day to do it. You can stay out of the market 4 or 5 days a month, right? And because it's the risk you have of being or doing something really silly, right?
Yes.
The risk is too high for the benefit you may take out of it. So, but the rest of the time, as long as this volatility persists, we are doing it well.
Okay, Val. Well, I hope you have a great weekend. Thank you for joining us.
Same for you and everyone in the room. I'm really planning to have a really quiet weekend and rest.
Okay.
For a change.
All right, we'll be talking next week, partner.
Yeah, indeed.
All right, Val. Thank you very much.
Thank you. Bye-bye.
Bye.